Stocks. I'm Cathy Yang, your intel on the Philippine market. U.S. President Donald Trump brought back his global trade war on top of his agenda, announcing tariff rates for the first 14 countries effective August 1st. Most of our Asian neighbors will face higher or the same reciprocal duties from the previously announced levels on April 2nd, dubbed Liberation Day. Goods from Japan and South Korea would be charged with 25% import taxes. The U.S. would also impose 36% levies on products from Thailand, 32% from Indonesia, and 25% from Malaysia. Tariff rates would stay on this level unless trading partners could broker new deals in the next 3 weeks. Other nations would face lower tariffs. ASEAN neighbor Cambodia would see a rate of 36%, down from 49%. Myanmar and Laos got 40%, Bangladesh 35%, and Kazakhstan 25%. Trump posted the letters that he sent out to trading partners, and here's one from Japan addressed to Prime Minister Shigeru. Trump wrote that Washington and Tokyo had years to discuss their trading relationship, but the president concluded to move away from long-term and persistent trade deficits. American trade deficit with Japan stood at $69.4 billion in 2024. Talks hit a wall last week over disagreements on cars and rice. The president also warned that if Tokyo raised levies on American goods, the figure would be added onto the 25% already charged. White House Press Secretary Caroline Leavitt had more of this to say on Trump's tariff war.
So the reciprocal tariff rate or these new rates that will be provided in this correspondence to these foreign leaders will be going out the door within the next month, or deals will be made. And those countries continue to negotiate with the United States. We've seen a lot of positive developments in the right direction, but the administration, the president, and his trade team want to cut the best deals for the American people and the American worker. That's what they're focused on.
And here at home, fewer Filipinos were unemployed in May compared to the previous months, according to the Philippine Statistics Authority. The unemployment rate fell to over 3.9% in May from 4.1% in April, translating to about 2.03 million individuals. This was lower than the number of unemployed persons in the same month last year, at 2.11 million. Meanwhile, underemployment in May also fell to 13.1% from 14.6% in April, translating to over 6 million individuals. The country's employment rate for May inched higher at 96.1% from 95.9% in May, with the services industry still the top employing sector, accounting for nearly 62%. Labor productivity is a driving force of Philippine economic growth. The Philippines lags behind its ASEAN neighbors in terms of labor productivity, closely linked to gross national income per capita. More in my report. From President Trump's April 2 Liberation Day tariffs to the volatility in oil following the recent Middle East escalations, foreign investors in the Philippines say the biggest risk still is something closer to home.
Number one would still be bureaucracy, the ease of doing business. That has been always on the table of the German companies whenever they do business here.
Such shortfalls resurface as the World Bank's recent report revealed the Philippines remains a lower middle income country as ASEAN neighbors Malaysia, Thailand, and Indonesia pull away into the upper middle income club. As for Thailand, while still in the same league as the Philippines, its economy has powered ahead faster, farther, and further than the Philippines has in 40 years.
Big companies have chosen to locate in Vietnam in a way that the Philippines is kind of struggling to attract these big investments in the region. They're quite strong in electronics, electronic products. For example, they can produce entire laptops, entire smartphones, even electric vehicles in a way that we can't.
Compared to our ASEAN neighbors, the Philippines also lags behind in terms of labor productivity, says Ronald Balbieran of the University of Asia and the Pacific, in the areas of agriculture, construction, logistics, as well as wholesale and retail trade. As the Marcos administration pledged to pursue economic reforms and help raise income status, Philippine think tank PIDS calls for a return to good governance.
Political risk actually generate economic risk. That's why there might be a need for us to be able to manage political noise by diverting attention, resources on economic affairs that would truly matter and create value for the economy. Well, for the economic managers, they can actually reinforce the structural reforms, but the implementation would have to be strengthened, particularly in the ease of doing business, particularly in infrastructure spending.
At a time of heightened global uncertainty, the Philippines faces its greatest battle yet, its own self. And with us now for his quick reaction and analysis, this is Luis Dumlao, the assistant professor at the School of Economics at the Ateneo de Manila University. Good to see you again, Luis. Welcome back to the program.
Thanks for having me.
All right, so what do you make of the employment report?
Well, I'm pleasantly surprised. It's May, and May traditionally, seasonally speaking, is graduation time. And traditionally, usually, or seasonally, unemployment rate is high because it's the time where students graduate and become part of the labor force and thus become unemployed. And yet unemployment went down to 3.9%. Obviously, we haven't looked at the numbers. It went out less than 30 minutes, an hour ago. I would look at agriculture because in the past few months, it's boom or bust with agriculture. It's either the highest gainer in jobs or it's either the biggest loser in jobs. I would look at that. And then the past few months, I would, if it continues, I would look at the labor participation rate. That means people no longer participating in the labor force. And keep in mind, if you're not looking for a job, you cannot be unemployed, you cannot be employed. So it would be people just walking down the streets doing nothing and not participating in the labor force anymore and thus no longer unemployed.
But to your point, May was also election period, the midterm election. So presumably there could have been some folks employed and now without jobs because it was it's a one-off thing.
That's a possibility. Yeah, that's a spot. But the previous one was 4.1%. That's already more than full employment, and for that to even decrease to 3.9%, that's really surprising. And how farther do we push this even lower than 3.9%? When I saw 4.1% in April, it could not be any lower than that. It cannot be sustainable, and yet it went down to 3.9%.
But
so
from
I
the
guess
point of view of the government, according to the Philippine Development Plan, they can't tolerate unemployment levels of between 4.4 to 4.7%. So they've got that leeway.
Yes.
Between now, 3.9 and 4.4. But then when you look at the numbers, 2.1 million so without jobs, that's kind of a concern, isn't it?
Well, people move. Keep in mind, it's a 50 million, more than 50 million labor force. And people move jobs. So that's natural. And the 3.9%, that's better than industrial countries. 5% in the US, much about the same in Canada and Europe. So that 3.9%, that's lower than even industrialized countries. So it's surprising. So I'll just say the devil is in the details, and we have to look at that. So, but
okay, well,
it's
now that you mentioned the devil in the details, the underemployment rate, that ticked down. So that was also a positive. It came down to 13.1%, as you can see there. But it had been trending higher, and it was a bit of a concern to the academics that I've spoken with, because since February, we've done double digits, and it did trend higher until May. For the academics and yourself, I would presume it's the underemployment that really captures a holistic view of the employment situation.
The underemployment tells us about the quality of jobs. It tells us about it's more indicative of the poverty issue. But that 13%, that double digit, has been there historically for so many years. It only went to single digit, I don't remember, last year, 1 month only. And then from that on, it's double digit as before. So that's the challenge. How do we bring it down? But
Yeah, because the problem is underemployment means that a lot more people are looking for paid hours or maybe even higher paying jobs. As you said, they could be employed, but probably underemployed, meaning they probably need another job to be able to spend on things that they need and want.
The colloquial term for that is "mac jobs." That means you're working, but you're not making enough. Or you're working long enough hours, for example, the vendors, but they're not making enough to sustain their standard of living, or the minimum standard of living. And that's why it's more indicative of the standard of living of poverty that's going on in the country.
And also in terms of labor productivity, because in the ASEAN, we're subpar. Labor productivity in Q1 showed a little bit of a weak performance there, and it would really be the engine of growth in an economy that's looking for an improvement in gross national income per capita. So what's going on? How come we're not able to solve this productivity gap?
It's been a long, it's kind of a puzzle if we already know the solution. I know people talk about, the motherhood statement being more productive, working harder, being more efficient. But even the term productivity, it's in academics, it's called total factor productivity, something like that, or in other words, it's referred to as the solo residual. What cannot be explained by capital or labor must be productivity. So it's everything we cannot explain, basically. That's the definition.
But from the government side, that requires maybe pushing forward with upskilling, reskilling, because this is the only way that we could become more productive?
Yes, it's always the solution. And
are we doing a good job of it, or we need to do more?
Obviously not enough, right? So, but I guess, but that is easier said than done once again.
All right. Well, thanks so much, Luis
Thank you.
Tumlao of Ateneo de Manila University. Appreciate the insights there. And you're watching Money Talks. Coming right up, more Filipinos will be connected digitally soon. And Brazil's president denounces Trump's threat of higher levies on developing nations. Keep it here on One News. Back to Money Talks. I'm Cathy Yang. Continuing on with Trump's tariff war, Brazil's leader denounces the president's threat of higher levies on BRICS countries, saying the world doesn't want an emperor. The bloc has issued veiled criticisms of Trump's tariffs, warning of rising protectionism. The U.S. president shot back, threatening to impose an additional 10% on countries aligning themselves with BRICS anti-American policies. On Monday, Brazilian President Luiz Inácio Lula da Silva capped the BRICS summit with defiance amid Trump's threats.
So we don't want an emperor. Our countries are sovereign. If Trump issues tariffs, other countries have the right to do the same. There is the reciprocity law. I think it's not responsible for a president from a country like the US to threaten the world with tariffs on social media.
Markets opened this week with losses following renewed trade tensions with America's trading partners. Both the Dow and the Nasdaq fell by nearly 1%, and the S&P 500 slid by nearly 0.8%. The S&P and the Nasdaq hit record highs last week ahead of the July 4th holiday. Benchmark 10-year Treasury yields rose to 4.394%, while gold prices were virtually unchanged, settling at $3,332 per troy ounce. U.S. futures are a mixed bag when the markets open later tonight Manila time. The Dow is down by 0.1%, S&P 500 falls by less than 0.1%, and the Nasdaq rises by 0.1%. As for Asian markets, they're on the rise in the first hour of trading. Australia's ASX 200 up by less than 0.1%. South Korea Kospi climbs by 1.4%, and the Nikkei 225 up nearly 0.5%. Take a look at our own markets. It's Tuesday. The Philippine Stock Exchange Index today opens lower by 0.1% at 6,422. The local bourse edged higher yesterday, Monday, by 0.4%, with the broader all-shares index also rising by the same level. Most sectoral countries and counters ticked up, except for mining and oil holdings. The Philippine peso opens the session stronger, 56.55 to the dollar. The peso closed yesterday weaker at 56.685 against the greenback. And 10-year government bond yields fell marginally to 6.23% from the previous close of 6.235%. With us now for more is Kyle Garcia, Equity Research Analyst at First Metro Securities. Welcome back, Kyle, to the program.
Yeah, always a pleasure.
Yeah, so what do you make of market reaction so far in just the first few minutes?
Well, I think the employment data, it has been flattish so far, but I think that a lot of investors are still pricing in a lot of foreign affairs, with the tariff talks and FOMC minutes also coming in the next few weeks. A lot of them are probably sitting back and seeing what data and what's the direction of U.S. policy also.
What are they seeing, though, and how are you gauging risk appetites? We're seeing letters come through, but none yet for the Philippines, and we're seeing now an extension of a deadline on August 10th.
Well, on tariffs, right, in terms of risk appetite, it seems that at least for the Philippines, we didn't receive any letters, but that's good on our side. And it seems that on a relative basis, the Philippines is largely more competitive and lower tariffs compared to the countries that receive those warnings and even letters, right? So I think in terms of risk appetite, we have seen better volume. So it should be good for the market if this continues, as long as we see better volumes overall.
Better volumes. I mean, talk to us about maybe SIMEPA, local stock transaction taxes. Ever since that came through, I've been watching total turnover, and it's been at least 7 billion pesos. Nothing like we've seen averaged out, many months of about 5 billion.
Exactly. I think, well, we're not entirely sure if we can attribute to this SIMEPA, but it can't be just coincidence, right? So we've seen net foreign buying for last week. And not only that, First Metro Securities has a large retail base. And what we're seeing is, we're seeing much better participation also on the retail side. So with this in mind, we've definitely welcomed SIMEPA, and it seems that a lot of our traders are trading more. So we're definitely happy with that.
How are retail investors coming to understand the lower transaction taxes and also the risk in which they're taking, investing right now, given the global policy uncertainty still that hovers?
Well, in terms of for our retail traders, before the lower transaction tax of 0.5%, this is largely felt by them. Before 1.2%, that's a large damage to a 1 million trade of around 10 pesos. Now it's barely around 7,000, right? So I think it's the less friction cost. This is much better for them. We've heard that it's definitely much more enjoyable, or we've seen better volumes for them. Not specifically that, but with the current levels that we are in right now, we see this as an opportunity to accumulate also. So alongside those levels and lower friction costs, our retail traders are definitely enjoying this.
Okay, so accumulating what?
Well,
They're definitely enjoying this moment.
Well, right now it seems that the REITs are doing better in terms of, especially some properties like Ayala. It has fared over the last week, mostly because we think that it seems there's a clear direction for policy rate cuts. Right? BSP has signaled a potential 50 basis point or a cumulative 50 basis point cut for this month, mostly because inflation has been good, employment has been strong. So we think that REITs and some property names, or specifically Ali, has been moving forward or moving upwards because we think that REITs, or specifically dividend counters, will outperform in the next few quarters.
So it's the interest rate sensitives and the dividend high yielders. This is where you put your money in.
Yes.
So nothing has changed in the first half of the strategy that you've proposed.
Yes, nothing
It's
so
just
far. You're right.
Same.
Yes.
But then there is more participation coming from the retail.
Yes.
What about the foreign, though? We've seen net foreign buying, and it's pretty interesting because it's been sustained since July 1st.
Well, when we talk to our investors or foreign investors, in the past, they really did say that Philippines has the highest one of the highest friction costs among peers in Southeast Asia. And with this lower lower tax due to CEMEPA, they really welcome this, and it was part of our key call that this lower transaction tax will increase participation, and we've seen that, and definitely happy so far.
What about currency issues, like maybe the dollar? Is it still a weak dollar story going forward here? And what impact is that having on the Philippine peso and the appetite for foreign investors to come in?
Right. So on the dollar end, right, so we have seen some slight flight to the dollar, mostly because we saw again a strong U.S. market, and with all this geopolitical uncertainties going on, usually a dollar is a flight to safety, right? So we saw an uptick slightly to 56, but we think that these are still manageable levels and still better than what we've seen so far. I mean, over the last few months, right? We've seen 59, but at 56, this is definitely a welcome development.
Now, there is that August rebalancing.
Right.
People have to watch out for.
Yes.
What impact is that supposed to have in positioning now and later?
Well, as I mentioned, Plus is sure to go in. Well, it has seen some bad performance over the past few weeks, mostly because of policy issues, right? But with Bloom exiting the index, definitely it has weakened also. So I think a lot of investors are preparing already for that exit. And plus, with that going on, we expect at least some rebound because of that index tailwind. But maybe I can talk a bit more on, which is something more exciting next year for February, because we've seen some clear developments so far. So just recently, RCR talked about an asset infusion, and we think that this would definitely shake up the index rebalancing in February. Should it be done, or should the transaction be done, or the share placement be done this month? And this will definitely potentially boost the odds of RCR exiting or entering the index by February. And with that in mind, we think that potentially AGI is the one to exit, since the criteria to meet the market capitalization, it's now the lowest in terms of market cap.
I was just looking beyond December, looking at the index. What's your target then for the full year for the PSEI, given all the changes that we're seeing?
Well, initially our target was 7.6, but with a lot of uncertainties on the tariffs, on the war, we've downgraded that to 6.9. But still a decent upside of around 8 to 9% from where we are right now.
All right, I like decent. Well, thank you so much, Kyle.
Thank you.
Appreciate it.
Thank you for having
Kyle
me.
Garcia of First Metro Securities. And bank lending in the Philippines continued to grow in May, driven by business and consumer loans. Preliminary data from the Bangko Sentral ng Pilipinas show outstanding loans from universal and commercial banks inched up to 11.3% year-on-year from 11.2% in April. Business loans rose by over 10%, with slower growth seen in key sectors like real estate, retail, and transport. Loans to manufacturing fell by 3%, while consumer loans to residents rose to nearly 24%, led by credit cards and salary loans. Internet access for all Filipinos, that is a promise behind the new phases of the National Fiber Backbone Project. President Bongbong Marcos led the launch of phases 2 and 3 of the NFB in Palo, Leyte. The initiative aims to bring faster and more reliable internet to remote and underserved communities across the country. About 1,800 kilometers of fiber optic cables will be laid out to cover regions including Cagayan Valley, Calabarzon, Bicol, Eastern Visayas, and Mindanao. The completion of the NFB will benefit about 1,000 government offices, as well as improve connectivity for over 17 million users and potential users of the internet in the country. And before we go, South Korea's first ever giant panda twins just turned 2. And they celebrated with a full-on birthday bash at the country's largest theme park. Ruibao and Huibao were treated to bamboo cakes, cooling ice beds, and toys by their keepers at Panda World in Everland. The twins, born in July 2023 to pandas Lebao and Aibao, now weigh around 70 kilograms each, a big leap from their birth weights of just over 100 grams. Dozens of fans, as well as Chinese ambassador to South Korea, Taiping, joined the celebration to wish them well. As they near independence, the pandas are undergoing training and will move on to their own enclosure by September. I wonder how panda cakes taste like. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.